It all brings us to our talk of the tape. So are investors right to declare virtual victory over inflation and position for an easier Fed? And is the stock market's 2-week pause a routine refresher, maybe a warning that the late 2023 rally ran a bit too far? Let's ask Dan Greenhaus of Solus Alternative Asset Management and Invesco's Kristina Hooper. Both join me here. Good to see you both. Thanks for coming by. And Dan, I guess just your take here. We're hovering, as I said. We actually crossed over into record high territory, 4,800. We're slicing it pretty thin here. Most stocks are pulling back, though, as we come into this year. So how are you reading the action so far?
You got to take the pullback, as you know, in some context here. The rally in November, December for the stock market was as strong an end of the year as we've seen in the last, call it, 40 years. And for any 2-month period, as strong a rally as we've seen over that same time period. So some digestion here. It wouldn't be out of the ordinary or shouldn't be completely surprising. And that's what you're getting. At the same time, the stock market's flat today, but under the hood, there's some big movements. Oil stocks getting a big benefit from the price of oil. You mentioned the airlines. They're leading on the downside here. So even though the index as a whole is flat today, there's some stuff going on underneath.
Yeah, some of the big growth stocks still kind of protecting the index. And Kristina, I wonder if I think the market has it correct in terms of taking heart in the inflation data this week. The bond market yesterday pretty much looked through a slightly higher than anticipated CPI headline. And then today, of course, PPI, it sort of confirmed what we were looking for. So do you think that we're okay here in anticipating what the Fed's going to do, or do you think we have a little bit of a check on that belief?
Well, I think markets are right in assuming that the Fed is going to start cutting soon. But I do believe that we should be prepared for some volatility because we're going to hear from Fed officials that are going to continue to spew hawkish speak. And so we're going to be rattled. And let's face it, the inflation data is not going to point to perfect disinflation. There are going to be some imperfect data points, some that might be concerning enough to cause some turbulence and cause some downturns in the market.
So do you think that that's strictly a matter of, the Fed wanting to, keep the reins a little bit tighter on the market, on financial conditions? Or do you think that there's genuine disagreement about the ultimate path of inflation here? Because it feels as if the market, it almost wants to call the Fed's bluff here. It's saying, the 2-year Treasury yield is now, 120 basis points below the Fed funds rate. It seems like it's kind of dialing ahead to that moment when the Fed needs to get moving.
The market wants to call the Fed's bluff because I do believe it's all about tamping down and easing of financial conditions. Let's face it, the Fed has been wrong before and terribly wrong. If we go back to December of 21, the dot plot indicated an expectation of 90 basis points for the Fed funds rate at the end of 22. And it was about 433 basis
exactly,
points.
Yeah.
So the market has some experience with the Fed, and it's calling its bluff, rightly so.
Certainly at inflection points.
I want to disagree with both of you. The market is calling the Fed's bluff. I mean, credit spreads are at extremely tight levels. IG spreads, investment grade spreads are sub 100, which is a really tight level. Yeah. High yield spreads, not exactly a spread product, but are pretty tight as well. And the stock market is, as you mentioned, basically at a high. So clearly the market is, both the equity and the credit market is telling you something here about the economy, about earnings, and about the Federal Reserve. It's not a theoretical thing. It's actually happening.
Well, I don't know if we have to characterize strength in risk assets as, believing that the Fed has it wrong. If the Fed is saying we think there's room for a few victory or peacetime rate cuts, right? So they're saying we're going to allow a soft landing to happen if we get that.
Of course, I just mean in the context of Fed members coming out and giving hawkish. Well, clearly that's not working.
Oh, it's not working.
In terms of tamping down.
They can still try, for God's sake.
Oh, they are trying. It's just not working.
The right ones have to say the right things at the right time.
Also true. Also true. But again, with the stock market at high and spreads at tights, it's not fully priced in, and we can argue about how one would do that.
Sure.
But clearly, the soft landing is what investors are betting on.